Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So here we see that market has completed some retracement that we discussed in the weekend, and in general we have spent a lot of time in the weekend and last week explaining why the situation in the gold stands a bit different compared to euro currency, to the cable, mostly because on the gold market we have bullish trend on all time frames. That makes us to treat this action differently compared to the same retracement that we see on the weekly, on the euro currency. Because if on the euro currency this in fact is a retracement of the major downside tendency, on the gold market is already explained that this might be continuation of the upside major tendency. There are only some factor that could hold the upward continuation, the lever bar. It stands around 2380 right there. So upward action, if it will start, might be not as strong as here. It's because market will have to take into consideration the additional resistance of this level. But this is what we have ahead of the current market. For now, since market is just moving higher after retracement that has happened, we should focus on the events that stand on the lower time frames. Also, be aware of the big data releases this week, so it's CPI, PPI numbers, retail sales, all this stuff could really shake markets strongly, and gold market's not an exception. So by far our trading plan with the pullback works nice. So if we'll take a look at the 4 time frame chart, you could see that extension was to the second level that we have supposed, and yesterday we haven't got any reversal. So yes, the market just keep going lower, but market right now stands at a very important level. So let's take a look. This is confidence level that we discussed in a weekly report, but also take a look. This is some kind of the area that splits some trading zones. So this market has moved in this zone. Trading here was out of it. Now return it back up, and that will become the support. So market actually retesting the B points on the 4 time frame chart. Trend stands bearish on the 4 time frame chart, but for those who trade on a daily intraday time frame basis, your direction is based on the daily trend, which is bullish, and you fade bearish trend on the intraday charts against major strong support areas. So other words speaking, you have the direction is determined by the daily time frame. On lower time frames, you just trying to find by some indirect signs, by the strength of the downside action, what the patterns are forming, how market reacts on the strong levels. You try to identify points where is less risky taking the long position until, it's very important, until daily trend remains bullish. So in weekend we have identified that this area is confidence and agreements very suitable actually to consider taking the long position. It's potential points where market could start growing. And if you take a look at the hourly chart, you could see what has happened. Once the XOP has been completed, this is the level that we have specified, 2335, and market's turning up. Now you could even identify minor reverse hand shoulders that is forming here. So this actually first stage of our plan is done. So level estimated, pattern has been formed. We've used it for possible position taking. So if you're based the position with this pattern, it's not necessary to hide your stop too far. So based on the butterfly that we have on a daily, theoretically we could accept even retracement to the 2315, because right wings on the butterflies very often form around 618 support area. So theoretically it might be that here we will get some minor bounce and then we'll get larger ABCD. This is also possible, but for now it's relatively safe. move stop to the break-even if you have taken position here, or just place it below this area, see what will happen. Once market will keep going higher, you could move stops to the break-even and just control the overall situation, data releases and so on. If market will fail to start upward action right from this point, and then another leg down will happen, we will have to repeat the same procedure around next support. But anyway, this will be much safer than just gambling, trying to step in at some occasional points, because when you're entering in some strong area, especially on the background of some clear pattern, it's always safer, and as a rule it lets you to out in most cases without a loss, because at least minimum reaction happens. That lets you to protect your position with the break-even stop or significantly minimize potential loss. So that ensures what we have from the gold. Now let's keep watching for reaction on this market, and it will be interesting what the CPI numbers will get later in the day.